here. Still a huge amount of detail. And this week's budget, people going through the documents, you can imagine the impact it has on everything, from the price you pay for petrol and electricity to the amount of money you and your family may get in social grants. Also increases in sin taxes, what you pay for cigarettes and alcoholic drinks. Melanie Malaleka is an economist at Absa Corporate and Investment Banking. Miyelani, good afternoon to you. I appreciate the time. After the budget, do you think most people will be a little bit poorer or a little bit richer after Wednesday's presentation?
It's a good question. You know, I wouldn't characterize it as richer, but I would say at the margin, Stephen, somewhat better off, right? So what are we seeing in this budget? We're seeing increases in social grants that are a little bit more than the rate of inflation. So there's inflation protection coming through, and then a little bit more. We're seeing an extension of the social relief of distress grants. It's not a lot of money. But for some 9-10 million beneficiaries, it's better than zero. We're seeing a little bit of I think, give back in a way in terms of taxes. We've actually seen Treasury saying that, you know, they're going to give back to the private sector taxes worth about 5.2 billion rand. There is full compensation for bracket creep. There is a small reduction in the corporate income tax rate. And we're also seeing, Stephen, an extension of public employment programs. So richer is not quite how I would characterize it, but I would certainly say that as a result of some of the interventions that we're seeing in this budget, a lot of people will be better off than otherwise might have been the case.
The Minister of Finance, Enoch Godongwana, is saying this week in an interview with Newzroom Afrika, Channel 405, that he wants to have a big comprehensive review of social grants. And of course this takes place in the context of a debate around a basic income grant. I've seen other people pushing back and saying, actually, there's nothing you can really review in our social grant structure. You can't take away a disability grant. Who would really want to reduce the amount, for example, of the childcare grant? Do you think we need a review? Could this actually open the door to a very difficult conversation?
I think it's pretty clear that the difficult conversation is already taking place. And, you know, we actually see this extension of the social relief of distress grant, which National Treasury actually said just in November last year they were not going to extend. We actually see the extension of this grant, you know, as a way of National Treasury coming out and say, you know, while we still resolve this sort of broader debate about whether big is appropriate or not, this has to be extended. But I think the discussion is already there. The question of what can be taken away in place of a basic income grant is a key question that South Africa needs to answer, because the grants that we already have do play a really big role. And I think there's a lot of research that has actually demonstrated that you know, they really do have a strong impact, strong positive impact in terms of reducing poverty in society. So do you really want to take those away and introduce the basic income tax? Do you want to face higher taxes or not? I think it's really ultimately a question of the trade-offs that we as society need to make in order to accommodate expanded version of sort of income support for low-income households, if you will.
The petrol price formula also going to be reviewed. I mean, nearly 40% of the amount you pay at the pump goes to government through administered taxes. But you can't really reduce that tax very easily. I mean, the road accident fund has to be financed somehow. The money that goes to pay the petrol pump attendants has to come from somewhere. Is there really much is there really much room for maneuver there?
I don't think, it's a good point. I don't think there's a lot of room, and it's one of the things that you know, the budget review does address. It seems that, you know, a review of the formula could drop the price a little bit, but it's not going to be by a big margin. You're right. You know, you can't just take away the road accident fund levy. That money is desperately needed. As a matter of fact, the road accident fund, as we know, you know, has got really large liabilities. You can't take away the general fuel levy. It's an important source of revenue for the state, and you can't take away a lot of the margins that are sitting in there, because it actually benefits the businesses that are involved in fuel transportation and fuel sales. So the scope to really adjust that it's not very much. I mean, and just as we talk now, Stephen, next week it does look like we're going to get another fuel price increase of at least 115 cents a litre. And I think the margins that the National Treasury seems to be talking about in the budget review in terms of what a review can do, it's not even enough to sort of match that, for instance. So the scope is very limited to do much, I think, in terms of adjusting fuel taxes.
And of course, the situation in Ukraine is not going to make anything better. It's going to make it all, I would imagine, harder. Everything's going to get more expensive. Miyelani, there's a sort of bigger question around our budget. Now, the government, we know, is in a very difficult situation, doesn't have enough money to meet all its needs. The pandemic, of course, has made things worse. The recovery's been better and faster than expected. There's been more tax as a result. A lot of that's going to pay back government debt. The problem is that I think for the last 10 years, we've started a budget off by saying the finance minister's in a very difficult situation, probably from around 2010, 2009 onwards. And that situation's only got worse. I can't see any scope for the 2023 budget to be any easier.
It's a good point. I think we've been a little bit lucky in a way over the last 12 months or so in that export commodity prices really shot up. And we ended up with this 180 billion rand or so overrun in tax receipts. But that's probably not going to be repeated going forward. But at the same time, we do know that on the spending side, the pressures are still really strong. I mean, the point that you raise about the possibility of a basic income grant or maybe an extension of the social relief distress grant is an important upside risk to spending that we have to factor in. But there are also other spending risks that we have on the wage bill, possible support for state-owned companies. Those risks are really still there, and I think on the revenue side, it just seems very unlikely that we will continue to have this big revenue overruns. And I think the underlying issue here, Stephen, that you're really talking about, where things have really underperformed over the last decade or so, is that you've got an economy that hasn't really been growing very much. We've barely managed 1.5%. Population growth is something like 1.6, 1.7%. So in per capita terms, we've actually been going backwards. And I think that if we can't really figure out how to get this economy to grow much faster than what we've been managing over the past decade, it's going to be very, very difficult for South Africa to achieve the fiscal consolidation, the debt stabilization that we had Finance Minister Godong going to talk about over the medium term.
Melanie Malaleka, thank you. Economist, Absa Corporate and Investment Banking. Appreciate the time this Friday afternoon.